Hello, 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 and welcome to NextGen Industrialists podcast where we decode the future of industrial innovation. I am your host, Belinda Ephraim, and today we are tackling one of the most misunderstood aspects of business growth: private growth equity partnerships. Our guest today brings a unique perspective shaped by decades of experience in law, private equity, and business transformation. Dan Lubeck, Lubeck, is the founder of Solis Capital, where he has redefined what partnership means in the private equity world. But what makes Dan particularly interesting isn't just his impressive track record, it's his philosophy that business growth and personal growth are inseparable. Before we dive in, a quick reminder: if you're watching live, drop your questions in the comments. We'll address them during our rapid fire segment. And if you're finding value in these conversations, hit the like emoji, subscribe, review, and share with fellow entrepreneurs who should be part of this community. Dan, welcome to Next Gen Industrialist.
Thank you. Very good to be here.
Yes, I'm excited for this conversation. Before we begin, it's a real privilege for me to invite people like yourself into conversation. When I do these things, I always liken my interviews to the indigenous African traditions of storytelling in community. I am going to start, but before I do, I want you to know that you are in absolute control. You can choose to not answer any of my questions or answer the questions any way that you want to. Dan, you've been both a lawyer and investor, but you're also known for your gardening. Let's start there.
Very interesting. Is that a question or a statement of fact? No, it's true. It's true. I don't remember how you know that, but maybe you're following Garden DJL, which is my Instagram handle. Most people
Hey.
don't know that's me because I don't have my name anywhere on there. But it's funny because you tied together business growth with personal growth, which I totally agree with. And Garden DJL ties gardening and what you learn from the garden with personal growth. So they're really all related. I do make a lot of analogies to the garden to what I do for a living. For example, when you grow things in a garden, you'll plant seeds. You often don't know when they'll sprout. Sometimes they'll sprout when you think they should, and sometimes they'll sprout a year later. And so I think finding opportunities in what I do is a lot like planting seeds in a garden, which is I plant seeds all the time. I just met with a business owner this morning who knows that seed might sprout very quickly or it might sprout 2 years from now. There's a lot of analogies to life, to humans, to evolution that you can draw from the garden and bring to whatever we do.
Yeah, I really like that concept because it ties back to relationships. So you're in the private equity world. I am on the strategic M&A side as well as venture capital. And a lot of times people assume that these businesses are actually transaction driven, but they're really relationship based. And to nurture relationships, it's almost like nurturing growth. That seems to parallel your investment philosophy at Solis Capital. Can you talk about just your transition from studying economics to law, your law experience, and then finally how that segued into the equity where you are?
Sure. So my law stint in my career was really always I always viewed that as a stepping stone. I really originally thought I'd be a real estate developer and I do appreciate real estate as a great wealth creation vehicle. And I started practicing law as a real estate lawyer with the thinking that's what I would end up doing. First learn the nuts and bolts and then hopefully then transition to be an investor and developer. But something really interesting happened when I was a first year lawyer at Paul Hastings. It very quickly occurred to me a couple things. One, most of the lawyers there seemed unhappy.
Mm.
They didn't say hi when you saw them in the hallway. They were frowning all the time. So they just didn't seem like they were enjoying what they're doing. But there were a few that really did seem materially happier than the rest. And I very quickly learned that those few were the folks that generated a lot of their business. They were the rainmakers. And so as a first year lawyer, I thought I need to go find some clients. And because I want to enjoy what I'm doing here, I liked the intellectual challenge of many aspects of being a lawyer, but just I thought that would give me some ability to advance and to do well and to enjoy what I was doing like these other folks. And so I was able to go out, and I don't remember how or even why they trusted or believed in me. Probably because I always was okay not knowing everything, and I was comfortable saying, "I don't know, but I'll find out." But I was able to get some little companies as clients, and very quickly, I realized how much I really enjoyed being a support to those entrepreneurs, and even though I wasn't on the team, being a resource to help that team accomplish whatever they were accomplishing, and they would really use me as even though I really didn't know much about anything at that time, really use me as a advisor and a support, and I really liked that. And I probably couldn't have articulated this then as much as I can now, having reflected on it now for very many years, is I was very drawn to the just organic nature of companies and how they're ever changing, and you constantly have to be learning and evolving and growing if an enterprise is going to be successful and evolving and growing. And I was also drawn to their limitlessness, whereas a piece of dirt has a theoretical limit. You can only build so much on a piece of dirt. A company has no limit.
Hmm.
And so I think I was very much drawn to that. And that started a transition in my thinking, which ultimately led me to want to be an investor in companies versus in real estate.
I'd like to unpack a couple of things that you've just mentioned. You notice the correlation between rainmakers and how they live their life with joy, it seemed like to
Yeah.
you at the time.
Yeah.
It's interesting because I actually had uh, Nadia Gill. She's strategy for Hitachi Digital. And she mentioned that Marsha Goldsmith, I guess, renowned coach, had said that the more time you spend with your children or like with something that gives you joy, that there is actually a correlation with the amount of money that you make.
Sure. Interesting. I
Yes.
think I think, look, I've never set out to make money. Obviously, we have to make money to pay the bills and
Mhm.
have to have a life, but making money has never been my end game, whether as a lawyer or an investor. I want to accomplish things that are important to me.
Yeah.
So, for example, as a lawyer, I took pride in keeping things simple. And I think that's another reason why my clients really, when I was a lawyer, appreciate what I did because I would try and take things that were complex and make them simple. Now, that's probably economically not as good because you're not billing as many hours, you're not generating as much fee, but it made me happy. I felt like I was doing a better thing for everybody. And I really believe I was. So it's funny you say that. And what it also does is you're hitting something that's a big theme in everything I do is just this value of time, which we don't realize it when we're younger because we have so much of it. And then the older you get, you realize more and more how valuable it is and how quickly it's going. And so how you invest that time.
Mm.
And so it's funny if I was going to unpack what you just said, I take that and as I do everything up to a high philosophical level. And I think the more time you invest in things that make you feel good, then the better you're going to be at all the things you're doing.
Yeah.
And so, yeah, it's very interesting. I never thought about it that way, but I think there is a correlation there.
Yeah, absolutely. Thank you. And let's unpack this statement. Companies don't have limits.
Yeah, they don't. And even more so than ever, you think about how quickly in the last decade or so, a company can go from startup to $1 billion company. It can happen in a couple of years, quicker in some cases. So that idea has only accelerated over time as you've got these massive scale companies that can be created and have millions of participants in very short periods. So there really is no limit to what a company can do. And then tie that back to our core philosophy at Solis. The cornerstone of our investing is that we technically, yes, are buying part or all of companies. We really view what we do as betting on and supporting leaders and leadership teams.
Hmm.
And that it is in our minds, without question, if you get that part right, there's an extremely high correlation to good outcomes and fun and accomplishing what you want to accomplish and realizing the potential you want to realize in that opportunity. And the converse is if you get that wrong, there's a very high correlation to, at best case, lots of work, but in many cases, poor outcomes, 10x the amount of time invested, et cetera, et cetera. So we really, going back to my early days as a lawyer working with these entrepreneurs, the other thing that really drew me was just my love and appreciation for entrepreneurs and business leaders and just how amazing they are creating these things and creating visions and getting people to believe in their vision and finding funding for their visions and then creating these companies that I could be part of the team, helping as a support, making it happen. It's all those things contributed to my path.
Yeah. I really enjoy just hearing your story. Before we dive into the technicals of what you do, what's one thing most people get wrong about growth equity?
I'd say in general, and again, everyone gets to choose their own investment philosophies, but if you read our website or you talk to any of us, you're going to hear very quickly how much we weigh leadership. And so I just feel like if you're not putting that much value and emphasis on leadership, then you're probably misallocating that emphasis to other things. Then I think there's, especially if you're we deal with lower middle market and middle market companies. So more often than not, these are entrepreneurially run companies. And I think there's a lot of arrogance in the investment community just because some of these people may not even have college degrees and they don't have MBAs and so they're not as maybe polished or educated as investors are typically, but they can be brilliant people and often underestimated and underappreciated for how much they know and how capable they are. And just there's an arrogance sometimes by the investors of, oh, because you don't know this, that you're not going to be able to do these things. And I think it is a mistake that happens time and time again. The value of that leadership and how critical they are to the company's success is underestimated.
Hmm. You just given me a couple of things to think about that I'm going to probably ask you later on that tie back to what you're saying. So, when you think about transition, or should I say business transformation, because your role is really to partner with the entrepreneurs, with the team, with the company, and really help them grow that business. What patterns do you see emerge around business transformation?
That's a great question, Belinda. In the companies that we work with, I'd say there's very consistently two areas that are underinvested. And these are two areas, really three. Two are underinvested in just dollars and time, and one is underinvested in time. The two that are underinvested in dollars and time typically are finance and sales and marketing for different reasons. Finance, I just don't think that a lot of business leaders give it enough, assign it enough value of how critical it is, particularly if you want to build an infrastructure for growth. Because if that piece isn't in place and functioning well, then no question you're going to have growing pains if you're successful at accomplishing the growth side of your plans. And then the sales and marketing, I think that it's just often underinvested. It's marketing, although it's becoming a lot more ascertainable in terms of how effective a campaign is versus the days of running an ad or publishing an ad and seeing how things go.
Right.
Today's marketing, you get a lot more very quick feedback as to whether something's effective or not. I still think that most business owners don't invest as much as they could or should to maximize the growth opportunity. And then sales, often they've got key salespeople. Sometimes it's the founders as well. They don't want to pay the big bucks that requires for great sales talent. Great sales talent often is a tougher personality to manage, but those are the people that make the rate.
Yeah.
And if you want to grow, if you want to realize the potential of the company, I feel like you really have to invest dollars and time in those two areas. And then the third, which is a very fundamental business practice, but often not practiced, is really spending time truly thinking of the strategic vision of the company. I give this one business school class, and I always start with this analogy. I ask, all right, who in here did mazes when they were a kid? And pretty much everyone raises their hand, right? And then I say, who in here realized that if you start at the end and work backwards, it's far easier? And not everyone raises their hand. Most people do. I don't know if you did that when you were a kid.
Yeah.
Yeah. So,
But
and
those only entry technically. The
right.
only
And
way.
so, and really, when you work backwards, it's less dead ends, it's less wrong turns. You can quickly get back to the start. And really, that's what strategic planning is. It's let's have a clear vision of what the end looks like. So, we're essentially starting at the end
Yep.
and then working backwards. So now you've got, here's my strategic vision. Here's where I want to be. What is the tactical steps to get there? That, and then break that into your yearly business plan. And so now, will you do it exactly as you plan? No, that may change. But to have a vision, to have that path, to be able to arbitrate decisions about investment of time and capital to try and maximize your likelihood of get to that path can be a big game changer in companies that aren't doing that. So that's another area that I feel like not just growth capital, but our partnering and our support really helps companies make happen.
So that's also one of my philosophies. Begin with the end in mind.
Yeah.
And I just find that a lot of entrepreneurs don't, let's start the business step, but then they forget to actually take a moment to say, okay, what is the vision? What is the strategy moving forward?
Yeah.
So when you work with entrepreneurs,
By the way, I think people either are strategic by nature or tactical by nature.
Mhm.
Maybe some people are closer to both, but you're probably more strategic by nature. And so that's how you think. You're thinking about the future and where do I want to end up? And then there's a bunch of other folks, and I actually include my this that are more tactical, which is how do I solve from getting point A to point B?
yeah,
And there's a lot of satisfaction in solving that. And so whatever you are, you could be better at the other. And I think it helps to recognize which one you are and be honest about it, and then recognize, all right, I can invest more time or maybe get other resources or collaboration to bolster the part where that's not my nature.
exactly. And so who do you partner with entrepreneurs who want to stay involved, who want to learn how to be more strategic rather than traditional buyouts, for example?
That's a great question that takes a lot of different components. First one is we always check our egos at the door. There's usually plenty of ego go around that We don't need to bring any more to the table. I think that it's a very underappreciated skill set of the ability to listen and really listen. And so we very much practice active listening. I think you're very good at that. It probably makes you a great interviewer. But you bring that and no ego, and it gives you the ability to try and really learn what's important to the people that you might be partnering with. And that's very valuable, not only to figure out how to structure a transaction, because economics certainly is important, but there's always other things in the top five that if you can learn those, then you can try and create a structure where your interests are very aligned. And ultimately, that's what you want in any good structure is alignment of interests. And then you can also then be prepared and best prepared to try and figure out what the vision is going forward so that there's alignment on that as well. I've got a saying that we use all the time, which is clarity up front eliminates conflict down the road. And great partnerships ought to have no conflict, and that doesn't mean you always agree, but it means that it doesn't boil into a conflict or a disagreement that you can't resolve fairly readily. And I think the best way to position yourself for that and for a successful partnering is have great clarity up front. Really explore things that are difficult, really try and learn where the bodies are buried, understand the fears and aspirations of the people we're traveling with, and let them know our fears and aspirations. And so that you can really come to a joint vision that ultimately you're signing off on before you make the investment. And we have processes that we've developed over time that are geared to doing just that.
Yeah. I want to talk about that. You're going to talk about your processes, like your investment philosophy, your criteria. But prior to that, can you just help people understand how does growth equity differ from venture debt and traditional private equity?
All these terms are relatively loose, but growth equity, I don't know. Uh, so growth equity can come in different forms. It's equity, so it's
Mhm.
not debt. So that's the first distinction.
Yeah.
It's typically in more mature companies, whereas venture or angel or seed, which those are certainly growth equity, but they're called those things in the inference in those names is that it's an earlier stage company.
Right.
So growth equity implies that you've got a company that already has a proven business model. They're generating revenue. In our case, they're generating profit, but they need capital to fuel growth, to seize an opportunity, to do an acquisition, to support working capital. Companies, as they grow, require working capital just for growth. So growth equity means you're usually solving for that. It could be minority equity. It could be majority equity. It could be partnering like us, which is much rarer. So I think that's the big picture definition. Does that make sense?
Yeah, it does. Absolutely. I just wanted to clarify the distinctions for the audience. What makes a company ready for growth equity versus other options, especially Solis Capital's partnership approach?
What makes a company ready? Yeah, I
Yes.
guess we got to let's unpack that question a little bit. So
Okay.
I would ask the question differently. I go, what's going to position the company to best receive equity of any kind?
Mm,
You know what I mean? Because
yes.
really any equity is growth equity at the end of the day, right? I mean, unless they're just literally taking the money and all the money going in is being taken off the table. And then that I guess wouldn't be growth equity. But short of that example, pretty much anything I can think of that's an equity investment is they're going to be using that for growth.
Right.
Now, I take that back. It could be to pay down debt, but ultimately that's to support. Maybe it's not for growth. Maybe it's just to maintain or to problem solve. but let's stick with growth because ultimately that's what we try to accomplish. If we're not growing an investment that we make either organically or through acquisition or both, then we're not succeeding.
Correct.
If we don't grow them and grow them not only in size, but in of evolution of making them a better company, then we're not accomplishing what we set out to and want to accomplish with an investment. So what makes them ready for that? And I'll speak to our kind of models, but I think it applies to any one that you're really the stakeholders of a mindset. They're ready to have other people at the table, which means that there's going to be other minds in there that are contributing and part of the dialogue. Now, how involved they are or not involved can be both stylistic, it can be structural. For example, even though we're minority or majority economics, we're almost always mutual governance.
Hmm.
That means we're true partners. Like at the end of the day, when it comes to the kind of decisions that are typically board level decisions, that means we need to come to agreement on those. But we also don't view our role as being involved in the day-to-day decision making unless our operators want us involved in the day-to-day decision making. If they feel like we can help them, otherwise, we feel like, hey, we bet on you. We believe you're great leaders. We want to support you any way we can, but we also don't want to interfere. We don't want you to take time away from creating value in the company to try and give us data or a thing that you wouldn't need otherwise to make your decisions as the operator. So we're more of a hands-off, supportive model. I know other investors that are very hands-on, very, I'm going to say intrusive to the leadership. I've known leaders that work for investment firms like that say 25% of their time was devoted to preparing for, meeting with, or debriefing with their investor, which to me is ludicrous. Again, these are stylistic differences, and I think they all can be successful. But I don't know that any leader of the type that we would bet on would be willing to stay in an environment like that because it'd be such a misallocation of time for them.
Yeah.
And so having a leader that's open to having a partner, that's one factor. Having clear and transparent data. Again, that kind of investment in the finance side, being able to really understand your business from a financial side. Now that you may not always get that. Like some of our entrepreneurial companies that we invest in, one of my favorite investments that we've ever done, and we're still in it. And our partners are amazing partners, incredibly talented business leaders and entrepreneurs. Like we really had to build the first financials for them, even though it was a good sized business already. We had to build the first financials that we then hired a firm to diligence to make sure that we were right. So
What size was that company, if you don't mind me asking?
they were doing at that time, they were doing 17 million in revenue.
70.
17. Yeah. On the smaller, but still a good sized company
Hmm. Yeah.
and very successful. And I part of that business is they had the luxury, it's higher margin. And they knew, by the way, even though they didn't have financials, they knew very at a deep level how their company was performing and when things were right and when things weren't. That's just talent. That's just hard work. That's just knowing your business. But they didn't have the kind of data that they have now, which enables them to really operate the business and make different type of decisions and bring in other people that then can help scale the business. The business was definitely constrained by that lack of financial systems, processes, and visibility. So that's another factor. I think it really helps to have a clear vision for where you want to go with the business. You know, the more readily and easily you can tell the story, the more readily and easily you're going to be able to sort through who might be a good investor or a good partner or not. And at the end of the day, I really implore companies considering bringing on an investor to really, there's plenty of capital out there. And if you're a good opportunity, there will be plenty of capital that you can find. And so it's really behooves business owners to be very discriminating and to have that mentality when they're evaluating bringing on an investor, because the wrong investor can take something great and make it way less great, not just in terms of the success of the business, but just in terms of your enjoyment and satisfaction of the work you do every day.
Yeah. You talked about are there any other criteria? Because I want to link this to your top five. You said earlier, you mentioned to create alignment when you come into this
Yeah.
conversation with an entrepreneur. It talks about your top five. Are these factors part of that top five that you look for to create alignment?
The alignment goes more to, I think one of the reasons we gravitate to a true partnering model is ultimately it's the best possible alignment that you can have. In theory, in a true partnering scenario, what's good for our partners is good for us, and what's good for us is good for our partners. There's other ways to incent people, but if we're incented by the same things our partner are incented by, then that's as good a structural alignment as you can get. Other things like, for example, for our investors, we don't take any carry until we've paid back their money plus a preferred return. So that's, I feel, very good alignment with our investors. We believe we haven't done a job that we should get paid for until we've returned all their capital plus a preferred return. And by the way, I think they feel the same way. It's just funny that other firms feel like even if they haven't done that, they should pay. So I feel like that's alignment. So it's just trying to find that alignment all the way through the transaction structure, all from operator, entrepreneur, partner to us to investor and throughout. So it's those sort of things that when we think about alignment that we're thinking about.
Yeah. So, can you walk us through your evaluation framework beyond financials? What signals true scaling potential?
Obviously, you look at their track record. That's not always an indicator, but it's a great indicator for what the future might be or what the potential might be. We try and understand the market and what the limiting factors might be in the market and really learn without judgment what's going to be good and what's going to be bad in this space, what's going to be good and what's going to be bad and challenging with this company and limit its growth. Because of our structure, our aligned structure with our partners, it's not hide the ball as much as it would be in structures where they're just trying to sell the company and walk away. So here, our partners want to really show us where the issues are, and so that we can set expectations that are fair and realistic. We often, almost always, when you're looking at a company, they'll not only be historical performance, but they'll give you projections as well. And we often want to structure incentives around the projections they've given us. And then if push back, there's always these issues in negotiations where we build a deal component around an expectations that's been set by our future partners. And then if they push back on that, you're like, well, wait a second, this is an expectation that you guys set in your forecast. And now you're saying, well, you don't know if that's a fair standard. What's underlying that? Let's help us understand what your worries are there. And should we be worried? And if so, why? And if so, then let's build a structure that accounts for that versus we had originally talked about. So we really try and learn. It's deal making is like dating, where there's a lot of analogies to date where, first of all, finding an opportunity, you can date one person and that could be your soulmate. and you could date 1,000 and still not find a person that you really connect with. And same for trying to find opportunities. And then similarly, like you can find opportunity and like love is blind. Like you can be so enamored by the opportunity and what you're seeing that you don't even want to learn about things that aren't good and aren't positive. And so when you're learning about a company, you really have to force yourself to, while it's good to have emotion and be excited. And I think that if particularly in our partnering, our partners want us to be excited about what they're doing. And that's part of the reason they're excited about us. But you also have to really just have that non-judgmental listening and questioning what is there that we're missing? What are we not looking at? And you develop that discipline over time by missing stuff and having it be painful.
Yeah.
And pain is a great educator. And you don't put your hand in fire more than a couple times, right? And when I'm like, we're looking at a new strategy right now, and I just met with a guy this morning that is a business owner in this strategy, and I'm really trying to learn from him, not only just the good but the bad, and what worries him, and what's worn him out, and what makes him frustrated, and what are the big challenges that he's had to overcome, and what are the ones in the future. And the more you can get that stuff, the more then you can really build a structure that I think everybody is comfortable with and excited about, and that ultimately where you won't have conflict down the road, where you can spend your time and resources hopefully creating value and solving problems versus disagreeing on stuff.
Well, you began earlier by saying dollars and time and then time.
Yeah.
And obviously, the way I look at that, dollars and time, I feel is more about operational efficiency, operational alignment. And then time, which is a strategic vision, is really like the growth potential. How should entrepreneurs think about both of those things, especially as we're moving into industrial transformation, AI transforming traditional industries?
No. They're your two most precious resources, right?
Mm.
Dollars and time, and then people. But when I think of time in an organization, it's the collective time that's available from your collective workforce to dedicate to the mission. And then dollars that's your oxygen. If you can have all the great people and time in the world, but if you run out of money, it's hard to succeed. Time and dollars are your scarce resources, and a well thought out strategic vision, and then the plan and budgets that support that vision will ideally allocate both those resources to their highest and best use. One of the things we do when we partner is we help our partners, which are typically the company leaders, really think about their time and how is it being invested. And it's an exercise we go through, which is take a month and look at your workday for an entire month and find 25% of that time that can be done by someone else as well or better. And then let's hire and find someone internally that we can promote up to take that 25% so that you then can then reinvest that time either into your personal life, because a lot of these people don't have any balance, and or both, into those things that no one else can do as well as them that will
Yeah.
advance the company's goals. That's purely a time allocation exercise.
So it sounds obviously in this business that we both are in, business identity consumption is what I call it, where the entrepreneur and the business, there's no separation between the two. And I like this idea where you actually go in and you say, how can we extrapolate percentage of that time and give you back the opportunity to actually breathe a little bit and enjoy life a little bit more
Yeah.
in your work.
Yeah. Yeah. And it's my selfish objective is we're going to have a better outcome. And we're never in a hurry to sell companies. We want to grow great companies. And so these might be 6, 7, 8, 9 year partnerships.
That's
And
unusual.
yeah, it is. A lot of the stuff we do is a little different than the norm because listen, it's hard to find these. And so when you find them, and if our partners, almost always the decision to sell is driven by our partners because they just say, hey, you know what? We're ready. It's time. We want to invest our time in other things. It's the right time for the business, whatever. It's driven by them. But if our partners are still excited about what they're doing and we can create more value by continuing to hold, then we'd rather hold. So that's how you build great companies.
Exactly. Yeah. I like that.
And so this time idea of helping them evolve as what it does is when they start investing their time better, they become better leaders. And it's how you open this podcast. If they evolve as leaders, the organization will evolve with them.
So, talking about evolving as leaders, as they evolve as leaders, the company evolves, the entrepreneurial culture improves. How have you seen that play out in real life when operations become professionalized and how you are able to maintain that entrepreneurial culture?
Yeah, it does change. We're change agents. So
Really?
if no one can think that we're going to come on board and everything's going to stay exactly the same. If that's the case, then you don't need us. And if that's the case, then they're really not ready to have a partner. So there's going to be change, and even cultures will evolve. You know what I mean? But what you hope and try and do is the things that are most critical in the culture, you got to figure out how to maintain. Some aspects of the culture may have to be let go of. Scale's hard, man. It requires change, and not everybody's ready. And sometimes you lose people that were fantastic people because they just don't want to evolve. They don't want to change in the way they've always done stuff. It's a process.
Yeah. Can you give us an example?
Gosh,
You
lots.
can anonymize.
Yeah, yeah. First, I'll do sort of high level. If someone's like if there's a new idea and they're saying, no, that's not how we've always done it.
Mm.
That's a red flag. The right answer is, hey, it's not how we've done it historically, but if it's better, then let's look at it. Let's look at it. Let's dig in. But yeah, I'm trying to think of a good specific concrete example, but those examples exist all over the place.
Great.
Like they're in every department, whether it's operations, finance, but those two in particular, there's evolution. And evolution is you're letting go of things that don't help you accomplish what you're seeking to accomplish, and you add things that do. And not everybody is willing to do that. And it maybe there's a correlation with age or how long someone's that's been to a company relative to their unwillingness to be open to change. Maybe there's a correlation. I've never done that study and I've never seen that study, but intuitively, I think there probably is a correlation, but it's not always the case.
Yeah. Yeah,
It's
I don't know if there is a correlation, especially as it pertains to age. I think there's more correlation as it pertains to mindset. We began this call
absolutely.
and you talked about strategy versus tactical. There's some people who very good with strategy, people very good with the tactical piece. I think my unique ability is the ability to bridge the two, have the strategic vision, and then, okay, here are the tactical steps to get there. But for some people, it's mindset. And if you look at their life in general, they've just never been open to change.
Yeah.
Change is really hard for them.
Yes. And there are roles for people like that too.
Correct.
but they're going to struggle in an environment where there is change and people are looking to change. And then change is part of the new part of the culture,
Mhm.
you know?
That's before it wasn't.
Yeah. And I think in general, people that have a curious brain, that are open to learning, that don't think I know everything I need to know, those are people that are going to be more successful, more creative, more able to accomplish results in ways maybe that are better than that have been done before, and probably just enjoy what they're doing more.
Yeah. Yeah. I like that. So let's talk about exit.
Exits. Yes.
So there is this misconception around exits that I find. And a lot of teams, entrepreneurs, business owners, founders, they think that when there's an exit, a liquidity event, that it means that they have to exit. Can we talk about what exits really mean for founders?
Yeah, well, that's a great question. So the exiting of a leader when we're doing it is a very conscious decision.
Mm.
And it's a decision typically that we'll make with them a year before we actually are exiting the company. Because we don't want to, when we always want happy buyers. Okay. It's just, you want happy buyers. I hope are you married or single?
I am happily single.
All right. So if there's a day that you get married and God forbid there's a day you get divorced, might say you want a happy ex.
Yes.
And so it's the same, it's all in the same genre. And the reason you want happy buyers is again, you don't want conflict, you don't want lawsuits. They're horrible. And so if we're working with a leader or leaders that say, I really just want to be done, then, and we'll know that before a year in advance, but will, and depending on who they are, what their role is, it could be more than a year in advance. But we want to make sure that we're going to deliver a company that has the leadership infrastructure that's going to enable them to carry on and continue to be successful. Maybe not as successful as they've been historically, but still be successful and be able to deliver good outcomes for the buyers. But that takes work, and it takes real people, and it takes real leadership, because those people that are the successor leaders are the ones that are going to really have to carry the weight of the transaction. You can't fake it. You also have to be mindful of, if it's possible, who you likely are going to sell to. Because if you're selling to a strategic, that's different than if you're selling to a financial buyer. If you're selling to a strategic, they may not care as much about the leadership. They may have leadership in place, and we're going to probably move on a lot of the existing leadership anyway. If you're selling to a financial buyer that wants to use the company as a platform, then they're going to put a lot of weight on the leadership. So that's really critical then, that they have a team that can support the initiative and help them accomplish what they want to accomplish with the company. And so it's a conversation we have all the time with our partners. We talk about exit all the time. Whether or not we're going to is different. In general, we think the right way to think about operating a company is as if you're going to exit it in a year or two, because that'll help make decisions differently. Now, if you're not, and there's an investment that's a big investment that really will pay off over many years, then that obviously doesn't apply. But if otherwise, it's good to be thoughtful of, hey, if we were going to sell in a year or two, would this person be here? Or would we make this investment? So it's a very helpful exercise. And for our leaders, it's like, hey, if you're really not going to be here, then we need to figure out how to have succession leadership that can be a very meaningful part of the sale process. But then if they do want to stay, which often is the case, then it can be very interesting for them.
Yeah.
They'll often get another economic package with the right buyers that has an equity component to it. if they love what they're doing, then they give them a broader platform to keep doing more of what they're doing. The problem, Belinda, is they get spoiled by being our partners and they think that it's always going to be that great. And then they go out to the colder, harder world of normal big company bureaucracy and all that stuff. And it's really hard. It's very rare for an entrepreneur, typically that are now have great economic success,
Mm,
to keep working with a buyer because it's just hard.
yeah.
They don't have the control. It's often the decision making is much slower and more bureaucratic. So they get frustrated.
Yeah.
I've had one exception to that in 20 years.
Hmm. And I think this is where, like, sometimes this idea that companies don't have limits, but I feel like the decisions that are made within the companies is what limits the company.
Yeah. Yeah. No. And it's amazing to me when I look at when you work with big companies, how slow some of them are. It's mind numbing,
Yep.
but yet they're very successful. And so it's really different leaders. You could be a great leader for a company at a certain stage and then not a great leader at a different stage. In fact, it's almost like an entrepreneur is a great leader up to a certain stage. And
Yes.
then the kind of characteristics the leadership characteristics that are needed for that company's next stage of growth are different. And so they're not going to be as good a leader. And that's true as the company continues to grow, that thesis repeats itself time and time again. Like someone that's great at taking a company from 30 million to 100 million could be very different than someone that's taking a company from 500 million to a billion.
Yes, absolutely. And I think a lot of entrepreneurs forget this. And you mentioned check your egos at the door. At some point, you should know when you should step away. Doesn't mean you have to leave the company. You
Yeah.
could maybe get on the board or have more of a strategic role in the company. A perfect example of this is Google with the founders, and they hired someone like an Eric Schmidt, for example, to come in
Yeah.
because their ability to build a company to a certain level, they understood that. And so they decided to bring in somebody else to actually continue growing that company and running it. A lot of entrepreneurs don't do that.
Well,
Most.
it's very rare. Those are very enlightened entrepreneurs. And it's very enlightened entrepreneurs that even bring us on board, but they're not ceding control to us. They're still maintaining control, but they're open to us supporting them.
Yeah.
But but those rare few, those enlightened ones are the ones that are ultimately generally the most successful because they have uncapped the limitations that
Mhm.
their leadership imposes.
Mm.
Entrepreneurs will let a company grow to their comfort zone and then it will stop.
Yes.
And so the great entrepreneurs recognize that and go, I want to keep growing this company. I recognize I'm a hindrance at this point. I can still add value, but I shouldn't be running the company anymore. And they bring someone in that has the right skill set.
Yeah. And I think that's where companies can be limitless.
Yes, that's
Expensive,
exactly right. You're
right?
100% right. And again, it's correlated to leadership.
Correct.
Those entrepreneurs that say, "No, I see this potential. I recognize I'm hindering it." They're great leaders.
Yeah.
They're good enough leaders to say, "I'm gonna step away and not let my ego drive this decision so that at the end of the day, my company, my baby can realize its full potential."
Wait, that's just waiting till they're frustrated, you're sick, or whatever the case is. And then that's when they want to sell. And
Yeah.
yeah, yeah. Okay, so let's get into rapid fire segment.
Rapid fire. What does that mean?
It's going to be, a good segue into your vacation.
Okay.
So in this segment, we try to challenge conventional wisdom.
All
And
right.
so what I'm looking for are quick hit responses. But if you ever feel that you want to express your point of view, even if it's controversial or expand a little bit, then please feel free to do so. Okay. So, one common belief about growth equity that needs to die.
The one common belief that needs to die is that minority investors are going to be passive.
Mm, okay. All right. Most underrated opportunity in industrial technologies.
Most underrated opportunity. I'm not sure I'd want to share that with you if I knew it, because that might be an investment opportunity, but
That, that maybe I can go invest in a startup company and then you guys can have line of sight.
yeah, I think the real opportunity is there is a tremendous amount of baby boomer run and owned businesses that haven't deployed technology even close to its highest and best use, that given the opportunity to do so could really evolve a lot as companies and grow and a lot of value to be created.
Okay. Biggest mistake entrepreneurs make when scaling.
Not investing in finance.
Okay. Most important question entrepreneurs should ask potential investors.
To talk to other people that they've invested with.
Okay. Any other questions that they should be asking? Like when you meet entrepreneurs, what are some questions you wish they asked you?
I love it. I love it when they dig in. They're like, what are you going to bring to the table? How are you going to help me create value? Really be not passive. Be, why are you going to help me? What opportunities do you see for our company? What have been your mistakes in prior investments that, you not want to repeat here? Give the same diligence to a potential investor that they give to any other area of their business,
Yeah.
and not be intimidated or feel like they need to be deferential. You obviously don't want to be unkind or rude, but I feel like I'm impressed by people that are willing to ask hard questions of me, because that means they're going to be willing to do that in any situation.
Mm, I like that. Okay. AI will eliminate the need for human operational expertise in manufacturing or otherwise. What is your opinion?
Oh boy. AI is going to eliminate the need for a lot of human things. I think about AI a lot. I have been for a number of years now. It's going to be very prevalent. I don't know what our world's going to look like. I really don't. I do believe that it's going to be touching our lives in almost every way. It's going to be driving our cars. It's going to be powering assistants and robots that work with us. It's going to be driving automation. It's going to be educating. It's going to be doing incredible things. I think the AI models of the future, I think there's going to be AI compute is going to become a commodity. And so how it's going to almost be like apps on a phone. What are the great apps? What are the great AI applications? So I think that's where you're going to see a lot of successes. I do think there's going to be broader AI things that are national security and warfare and all those things where AI is going to be also applied. I don't know. It's going to displace a lot of jobs. I really believe that. I hope and that it creates, an ability to have a society where then people still can have relevance and do meaningful things. But I don't know. You look at science fiction, and pretty much every science fiction has AI trying to destroy man at
I
some
know.
point.
What's in
You know,
there?
and I don't know, like, why that is wrong. It could be right. So I worry about this future, and I don't think that, as incredible as all this technology is, I don't think it's really improved the human quality of life.
Mm,
And so that part I don't like, but it's not going away unless we have some kind of apocalyptic situation where electricity goes away, in which case I'll go back to the garden and growing food. Hopefully my family's still with me, and I'd be just fine with that, by the way.
And
But
I'm gonna come to your farm and
yeah, you're
sure.
welcome. You're welcome. Hopefully there won't be a lot of conflict over resources in that world, but who knows? It's such a fast changing world. Like we used to do software investments, and it'd be very hard for us to do a software investment today because it's so hard to underwrite how it will be impacted by AI. There's really smart guys out there that are still doing those investments, and that's great. They know a lot more about it than we do. So we're more sticking to our guns of stuff that we clearly can prove is not as readily displaceable.
Yeah. So vertical integration is dead in the age of specialized suppliers.
Okay. Vertical integration is dead. Vertical integration is dead in the age of specialized. So what does that mean? So you're saying that like companies then, if they're now outsourcing versus trying to do it all in house?
Yeah, because I guess outside of software, whether it's manufacturing or some sort of industrialization process, local supply chains, that idea dead as a strategic value add in the age of outsourcing or specialized suppliers.
I think there's probably truth to that, but I also think there's exceptions to that. I think a lot of people, a lot of industrial manufacturers are now insourcing a lot of manufacturing, especially domestically,
Yeah.
and that there's things that have happened in the world and the marketplace with tariffs, with cost structures, et cetera, that make that a really viable model again. So that's a little bit of a reversal of that, right?
Yeah.
But in general, I think there's this idea that when people really specialize, they can do those aspects or components better, cheaper, faster. And so that eliminates this idea of being a deep vertically integrated organization.
Hmm. Yeah. Talk about tariffs, not from the political perspective. How are you seeing that play out across your portfolio?
Well, let me think about that. It's not good. So of our active investments, probably 2/3 are service companies. So I don't think they'll be, I'm more worried about AI for those than I am about tariffs.
Right.
Um, for the third that isn't, I think that there's a lot of them still at some point or another have suppliers in China.
Mhm.
And so how that all shakes out will have an impact on pricing. I think there's the risk of inflationary pricing for a lot of the imported products, which is the majority of products that we consume every day. So I don't know. It's such a complicated economic world that let's say you have higher pricing, that causes more domestic manufacturing, which is the goal of a lot of the tariffs. Does that just create a higher sustained pricing model? Or do then things change that bring down the costs, whether it be imported or domestic? I don't know. It's going to be really interesting to see how that plays out. That was always my felt like the biggest risk of this presidency's policies of there may be more inflation before we get to a higher ground. What we have to unwind to get to world US economy where we're not burdened by this tremendous debt burden, you got to pay the piper at some point.
Yeah.
And I'm prepared for it mentally, and I hope otherwise. And I hope our companies are similarly because I think we share that philosophy with them and they all agree. So we'll see how it plays out.
So that brings me to my next statement. Supply chain localization is purely political, not strategic.
Mm, that's an interesting statement. There could be national security implications as well. Is that political or is that a separate category? I think that our manufacturing a lot of our own stuff could be a good thing for the United States. I think we have amazing partners in Mexico and Canada that will also benefit from that mentality our administration has, and that it's reflected in a lot of its actions. So I think our wonderful neighbors to the north and south will benefit from that. I think it's good to have a balance in the world. And I think we let too much manufacturing go elsewhere. I think it's important for people to have something to do.
Mm,
And if we outsource all of our manufacturing and AI displaces all of our jobs, what is left? So I think that having stuff to do that's meaningful is really important for the human experience. And if we export all of that to other countries, then that worries me as well.
yeah. Yeah. Those are definitely things that keep us up at night. The last statement is growth equity is just private equity with better marketing.
I don't think it has anything to do with marketing. I think it has to do with growth equity. Yeah, it's not a market. Maybe it is a marketing thing. Certainly, we use that. If marketing is trying to deliver a differentiating concept to a marketplace, then yeah, the term growth equity is a marketing term. Because all equity really, we talked about this earlier, virtually all equity is used ultimately to try and grow an organization.
Yep.
But it does have implications that separate it from other types of equity, which it does have implications that maybe make it distinct and not just a marketing catchphrase.
Yeah. Plus the fact that even though you do take up from minority to majority equity, it's not a full buyout.
No.
So that could be a differentiating aspect.
Yes. You're right.
So we're moving into our closing segment.
Okay.
we are we are almost halfway through this decade. What excites you the most about the future?
That's a really interesting question. What excites me the most from like a business standpoint or a personal standpoint? I love watching my family grow. So that's probably what excites me the most about the future. I don't really love, as I said, all the technological advancements. I don't love them. I accept them and I recognize they're not going away. I don't think that they improve the human experience. I think they separate humans. I think that social media creates a lot of issues in relationships. Again, I can only compare it to what like makes me happy.
Yes.
And maybe there will be a new way that humans find happiness within this very different world that's evolving before us. I hope so. Will that level of human happiness be the same kind as my human happiness? I think humans are happiest when they're connected with each other and they're connected with nature. If humans can find that kind of, and I believe that's just a human trait, either the future will find a way for humans to have that connectivity. If I'm right, that's a human trait. Then there'll be a great future with all this technology. They find a way for that connectivity. Then that would be a great future. Or all of this technology creates other ways to have that happy uh, human experience.
Right.
Then that would be great too. I don't know what that would be. I'm hopeful.
Good. Good. I love this. That's a surprising answer. But yes, I think the human element is really important, especially with these new technologies that are around. We've seen what happens with social media. And so you wonder, will AI exacerbate the mental health issues that we're seeing, the division that we're seeing? But I think, like you, I'm actually excited about what the future is because now we are aware. There's awareness
Yeah.
around the
Yeah.
negative aspects.
Maybe it may be a utopia. Maybe AI and advanced energy capabilities will create this even more enlightened society where we eliminate all of the strife and war and other things that, we do now and have a much more utopian world. And I hope that happens. I want my kids and their kids to have great lives, but we'll see.
Well said. Thank you. I got this from one of my favorite podcasters. Imagine it's your last day on earth many years from now. and you've become everyone like is like, "Ah," and you've accomplished everything you've ever dreamed of. But for whatever reason, you have to take everything you have ever created in this lifetime with you. And no one has access to any information about you anymore. No websites, no YouTube interviews, nothing. But you get to leave behind three truths, three lessons that you want to leave with the world. What are your three truths?
That's a very heavy question, man. That's a really great one. So my three truths. Man, see, I want to say them, but I haven't revealed them yet in Garden DJL, and I'm working my way there. So the question is, do I want to give a preview?
Of course you do. And
I'm
then this
back
way you
here.
can actually articulate it even better in the Instagram post.
Okay, so here's one of them, and this is soon to be revealed in at Garden DJL. Is I believe that every decision humans make is a subjective cost benefit analysis, and that humans always choose what in that subjective way, what's in their benefit. So even if someone's being incredibly altruistic or incredibly kind or whatever, and it doesn't undermine the fact that's an amazing way to be, it means that they value that at a much higher level than the cost of that. So that too is my belief is a human truth. The one I won't reveal yet that will also come out later is what I believe drives all of us as humans. That one's coming later, and I don't even know when it's going to come out, so I can't.
No, share. That's why, listen, Dan, this is why you are here on this podcast.
I can't do shit. I can't. It's then I'm giving away like the all I'm building up to. It took me so long to even figure out how to start Garden Detail, and how to get about what I want to say there. So I thought I had all this content, and I told everybody like the first 100 was private. I told everybody once I hit 100, I'm going public, and then I'm going to share with you all this stuff. And I hit 100, and it was like 3 months before they heard from me because I couldn't figure out how to start it. Now I've started, so now it's getting fun and more exciting. But so that's one truth. Another truth.
Is
Hey,
this
there
you?
it is. There it is, Garden DJL. Yeah, there's the
Very
little vegetable family. Um, and then another truth would be that, and this is from my dad. So I gave my dad before he passed. I asked him, and he was a really amazing man, very quiet, very thoughtful, very well loved, um, and highly respected. And so I asked him before he passed, I said, "Hey, will you write down, just some pearls of wisdom, kind of like you're asking me now?"
Mhm.
And I thought if I was betting what would be on there, I thought number one or number two would be like live with integrity, do the right thing, because he really was very much that way. But his number one was in every human interaction, every human. Wait, I don't want to misquote him. I have it here. Here it is. Hmm, if I'll be able to find it on the spot like this.
Take your time.
Um, well, I can tell the essence of it. The essence is that and every interaction is important, and that you should try and make it a positive interaction. And it's a very powerful statement that I learned in relation to this law school professor pulled me aside who I never had a class from. And but everyone knew who he was because he's this brilliant, super well published professor. He said, I really want to have dinner with you. And it was this kind of long process because it was so out of the blue and I had no idea his intention. But basically he wanted to pass on to me this idea that how you interacted with people, not just like I viewed the world in sort of these back then in these concentric circles where the only ones that really mattered were the really close ones. And whatever the outer rings thought of you or said about you, it just didn't matter because they were in the outer rings. They didn't know me, et cetera. And so his message to me was, hey, all those interactions matter. If you can make those positive, there's no limit to what you can accomplish.
Yeah.
Kind of back to your point, back to human relationships and how critical they are. And so wine years later, when I had my dad write these, and that was his number one, I just think that's very profound. And I don't think people appreciate it. I certainly didn't appreciate it as much as I wish I had. And so grateful that still as a relatively young man, I was given that lesson. And I think it changed the trajectory of my life. And then my third would be the one I'm not going to tell you, but in, in place of that one, in place of that one, I think it's be curious, it's be curious. The child in you never dies. A child,
Yeah.
the opposite to my mind, and I share this with this class. I say, what's the opposite of listening? And it's judgment. It's assuming what you're going to hear before you hear it, assuming you're going to see what you see before you see it. And I think like if you, you know, if you're on vacation, part of the reason vacation is because you're not judging everything. You're open to everything. Oh, look at that beautiful sidewalk. Oh, look at that beautiful building. Oh, look at that, this and that. Whereas if you had that mentality when you walked out of your front door every day, because it's different every day, that you don't have that judgment. It's not blocking you from seeing what's really there in front of you. Kids, when you're saying have a childlike mentality, it means eliminate all the preconceived notions that you built up as an adult and look at the world as a child. And I think if you do that, life's way more fun and interesting.
Yeah.
That's my number three.
Okay. So since you skipped the one that you're going to tell, but you're not
Yeah.
telling.
And then I don't even know when it'll come out.
Okay, so
'Cause it
let me see if I can let me see if I can inspire you to give us a sneak peek. I'm going to read you your most recent Garden DJL post.
Yes, the first real post of substance actually is,
So which one should I go to? The first one?
well, so again, I'm not very good at Instagram. I have no, like, I'm just trying to find, like, as my wife done, how do I post this? How do I do this? How do I do this? So what I'm trying to do is have every post be sequential. You know what I mean? So if you start at the beginning
Okay,
and
I like
just
this.
went through, it tells the whole story. It'd be like if you read them all together, it'd be like reading a book or
Okay,
something. So it tells the story sequentially. But the
right.
first post of sus was about the arugula plant. Is that the one you're looking at?
Yes, okay, this makes sense now. So uh let me read this to you. Since we understand the arugula will fundamentally drive its energy through reproducing to make more tasty leaves, we simply pinch the flowers off as soon as they appear. In doing this, we direct the plant to grow more leaves, which will support more flowers, and so on.
Yes.
So let's philosophize a little bit.
Yeah. I mean, so by the way, the reason where I'm going to is now, and if you look back a few ways, when I actually officially got to 100 followers, that's when I said, "Hey, we made it, we did it. Let's start a gardening gel." And I forgot what the actual title was. It was, you know, life. I think it was lessons from the garden, and
Yes.
then and other. What does it say?
Fundamentals of human nature.
There it is. So that's really what it's about. And so the arugula story is going to lead me to the next piece, which actually is when I'm going to share that first fundamental axiom of how the human decision is always a cost benefit analysis. Because once you understand that and accept that, then a lot of things fall from that.
But then, yes, and to add to that, I think it's not just accepting it, but assessing those decisions,
Oh, absolutely.
right?
Absolutely.
Okay.
And it gives you a framework to accept the fact that you're making those decisions
Right.
and not try and BS yourself that you're not.
Correct.
And so, yeah, it's look
Okay.
at
So I'm following you. I followed you.
all right. No, no, no.
So now you, no,
Welcome.
so now I'm going to be number 106.
Wow, that's cool. I didn't know how many I had. Um, but
And we
there
can,
will be some gardening stuff along the way that's like pure gardening stuff, but it all eventually will relate back to, I think, kind of the lessons we learned that then apply to life.
I always love learning more things I didn't know about um the folks that I bring on here to interview. So it's always nice.
Yeah,
Um,
it's super fun. Very
yeah,
fun spending this time with you, and
yeah.
you're great dialogue. I really appreciate it. Went
Thank you.
very fast.
And I have one more question.
Yeah.
What's your definition of a next gen industrialist?
Boy, the next gen industrialist. And is it industrialist like the person doing the work or the person that owns the enterprise?
I think both because whoever owns the enterprise is probably doing some work.
Yeah.
So, like, I guess for me, when I think of an industrialist, I think a lot of people get thrown off by the word because they think just manufacturing or, you know, cybersecurity or to me, it's just a business owner, but someone who is industrious.
Yeah.
So, what
I
does
mean,
that next gen look like for you?
they're still going to be industrialists that, there's going to be technology in any business. It doesn't matter how rudimentary. There will be technological advancements. So every industrialist is going to have to embrace and incorporate technology into their um, operations or offerings. I mean, they're going to. And then when you get to technology industrialists, they're going to be doing things that we can't even imagine today. They're going to
Yeah.
be providing services and creating, you know, things that we just don't even think about now. So it's the world is evolving very quickly, quicker than ever in history.
Yeah.
And so we'll see things, and it's going to be a lot of great stuff. I mean, there's going to be tremendous medical breakthroughs because of all of this technology. That's one of the great, I think, benefits of it is they are going to cure a lot of disease.
Yeah.
Um, a lot of disease is going to be cured. Like there's a great scientist doctor over at UCI that was recruited over 3 years ago. He said, "We're going to cure degenerative blindness."
Mm,
And I think they're going to cure it. And he said in 10 years. And, I saw him the other night, which is now 3 years into his stint. And he said, we're on track. We're going to get rid of that disease in 7 years now. So
wow.
there's going to be a lot of that. It's the ability to design and manufacture proteins that can be used in medicine and food and other things is our understanding of those proteins is just accelerating exponentially. I think Google has a technology that has mapped you could design and map all these different proteins. So there's just incredible technology that a lot of it's going to create a lot of great things for humanity. Hopefully, enable us to live a lot longer than we otherwise did. That's my hope.
Yeah.
Uh, yeah.
My hope is to live till I am 150 years old. That's
Oh, I
my
like it. That's a good one. I'd like to. I mean, and not just live, but live well. You
yes,
know.
you well.
Yeah,
Yeah,
that would be amazing. And who knows, man? It may be possible.
it is
So
possible.
yeah. So
Yeah,
I'm excited about that.
that's so nice. Okay, I didn't have this question, but you seem like someone who reads.
I
Do you
do.
read?
Yeah.
Okay, give me 2 books.
Mm. Well, uh, Outlive, based on what we were just talking about, is a really good book.
Yay!
Did you know that book?
I have
Yeah.
it.
Yeah, it's a great
I
one.
love it. Peter Attia.
Yeah. And then I'd say one that was fascinating to me. I mean, there's so many good books. It's hard to just give 2 books. But one, let me see if I can find it. Um, it's a futurist. Oh, the accidental superpower. Did you
We
ever
oh,
read
yeah,
that?
yes, mhm,
The accidental superpower? And it
yes,
talks about,
power.
I just thought it was fascinating. It talked about United States and why we've been so successful and just kind of our geographical luck with no hostile borders, deep oceans surrounding us, navigable rivers deep into our land, and then
Mhm.
lots of natural resources. And then how really that's why we're so successful. It's that is the under, but then it talks about so many, and he's written other books since that may actually even be more relevant. But he wrote this book, I don't know, over a decade ago, talking about all these things that and just nailed them. And what's his name? He's a fascinating futurist.
I'm gonna do Joe Rogan here and do a Google.
Yeah,
That's
do
this is
accidental superpower.
Peter Zeihan,
Yeah, yeah, fascinating guy.
and it
So
looks as though he brought on it might be a new book, like a
yeah,
full
he's had a few books since accidental superpower. Um, he's had a few that are probably even more timely and more relevant. But I read that one. I just it was so interesting and impactful and helpful to understand at a very big picture the dynamics of the world. You know, again, I like to understand things at a very fundamental, basic level.
Mhm.
Because if you can understand that, like when I negotiate or when I try and find a path forward, I always want to understand what is the philosophical objective, and if you can reach philosophical agreement, then the details you always can work out. And
Right.
if you're trying to understand what's going on in the world, if you can understand it at a sort of a fundamental philosophical level, then you'll have a good sense of what might or might not happen. And then, like Elon Musk, I mean, when he's trying to understand engineering challenges, he's like, is it prohibited by any natural laws? If the answer is no, then he goes, well, then let's get her done.
Yeah.
And so it's an interesting way to look at things and I think helpful.
Yeah, it actually for me, I find that thinking in that way because I have such a curious mindset. I find thinking in that way actually allows me in my own way to sort of predict the future in
Yeah.
terms of
No, it does.
trends
It
and,
does.
have something
I completely agree. It enables you to see and predict trends.
right, right. Um, wow. I didn't this was exciting conversation,
Yeah.
Dan.
Super fun. Thank you
Yes,
for inviting me onto your awesome podcast.
thank you.
And thanks for doing this. And I hope I get to see you soon.
Yes, we are going to schedule time for coffee, when
All
you
right.
get from Colorado. So
Yeah.
let me close out and then we'll sign off. So, our audience, if today's discussion resonated with you, we talked about growth equity, of course, but we also talked about gardening, we talked about philosophy, we talked about first principles thinking. Remember to subscribe and hit the notification bell to stay updated on future episodes. We never know what direction the conversations can go. Next week, we'll be back with Anna in Conte exploring the $1 trillion wealth opportunity of female entrepreneurs. This is Belinda Ephraim for NextGen Industrialists. Thank you for watching and listening. Until we meet again, keep building the future of industry and pushing the boundaries of what's possible. Have a good one. Bye.